Hello traders, good morning, good afternoon, and good evening, bonjour, bonsoir mes amis, guten Morgen, guten Tag, guten Abend. For those of you who are new to us, we are the TSTW 24 traders. The title of the video is how to exit a trade like a pro. All right. Today I receive an email from a TSTW trader, and the email is saying like this: Good morning. How do you exit a trade? How do you look? What do you look for as a signal to exit the trade? I believe this is a personal question, a specific question, which I like very much. I like trader to ask a specific question, and I think this trader wants to know exactly how I myself, George, exit my trade. So I think it's a personal question. But what I'm going to do in this video, I will talk about how I myself exit the trade, but I will also talk about how other traders exit the trade. The first thing that we need to understand, there are many ways trader can exit the trade, and it depends on everybody's risk tolerance and also everybody's trading style. So you do not have to do exactly like I'm doing. You may disagree with me in this video, but there are ways that traders will exit the trade. Okay, I'm going to start first with the market patterns. So I say to traders all the time that in order to achieve consistent winning trade, one must not violate the market pattern. So suppose we are in a rising channel. I'm now on the hourly chart. Suppose I am day trading and I see a signal on the hourly chart and I go to the first best time frame to enter my trade, or to the 1 minute chart, 2 minute chart, 3 minute chart to enter the trade at a low risk entry point. So in a rising channel, we are looking for a signal on or near the lower part of the rising channel. Yes or no? Okay. All right. So suppose so we need 2 points to draw. So in fact, 3 points we need to use to draw a channel. So here on my apologies to traders. As I said to traders, I'm coughing. I have a bit of flu now. So you'll see me coughing sometimes. So just, ignore it. Please accept my apologies, okay? So the price, you can see we need 3 points to draw a channel. 2 points, a low and a higher low and a high here. So with these 3 points, we can draw a channel, okay? Suppose, so after I see 1, 2, the third time the price retesting, so you see here, touch it here. So in this zone here, suppose, I go to the entry time frame and I enter a trade, okay? How do I exit this trade, all right? If the signal, traders, one way that I will exit this trend is to use this trend line here. You see the common sense trend line. So you see here, did you see the trend line here? As this trend line is broken, in fact, the best place to enter is somewhere here. All right. So suppose I enter this trend on my entry time frame in this zone on the edge of this trend line here. Okay. And the price start going up. Okay. Price start going up. I'm quite happy. Okay. What will force me, to exit the trade? This trend line here, the common sense trend line here, all right? If the price try to go below it, okay? So I'll draw this trend line now, okay? You see this orange one here, all right? If the price try to go below it, I will exit the trade. This is one way to exit the trade. So because we are in a rising channel, so this trend line is broken on the edge, we receive a buy signal, price going up. If the bullish trend line along the price is broken, we can exit the trade. But if you stay on the hourly chart, it will be a bit too late for you to see that the price is closing below this common sense trend line here. So the best thing to do is to go to the signal time frame. So for instance, if I go to the 5 minute chart, and I see that 1 candle or 2 candle on the 5 minute chart, on the 3 minute chart, on my entry time frame, closed below this common sense trend line of the hourly chart. The trend line is drawn on the hourly chart, and I see on the lower time frame where I enter the trade, a 2 or 1 candle close completely below this trend line, I will exit the trade. All right. So this is one way to exit the trade using the trend line. All right. I will show you another example to exit the trade in a downtrend. So You see here the price display a high, a lower high. So with these 2 points, this point and this point, we draw a bearish trend line. We are waiting for it to retest it on the edge. Retest it here. This is a bearish setup. We will not enter the trade on the signal time frame. We go to the entry time frame. All right. Suppose I enter a sell signal here. I will receive a sell signal here. Now I will go to the entry time frame. Apologies to traders. And I will enter the trade. Okay. You see a bit messy here. You will see that sometimes. So you have to place your stop loss somewhere up above here. We talk about how to place stop loss in another video. So as the price going down, okay, how do I exit my downtrend trade? Okay, you can here. This is quite messy because of the non-farm employment chain. What you can do is to use again a trend line. Okay, so price going down. Okay, I'm going to draw a line like this. This is quite messy. Okay, just accept it. So suppose this is my common sense trend line. So price should be below my common sense trend line on my signal time frame. Here I'm using hourly chart. And if the price here is a bit messy, as I told you, okay, sometimes the price may come above it. You may decide to close it straight away, or you may decide to stay on. You will face that situation where you will see that the trend line is broken, but you may decide to stay on. At the end of this video, I will tell you what you need to do to avoid that a winning trade end up being a losing trade if you were quite a tolerant trader, which means okay, you see that it's time to come out, but you want to give it more chance. How do you handle that? Okay, so you wait for it. So if you sell, okay, and the price is below a declining trend line, if a candle, you go to your entry time frame, a candle close one or two candle close back above that trend line, you know that that bearish momentum is diminishing, so you will close the trade. All right. If the price, I need to stay with me, I want to tell you more, okay. If the price is in a horizontal channel, there are strategies that we use, so this will be a setup, horizontal channel, okay. So you can look for opportunity to buy on the lower part of the channel and look for opportunity to sell on the other side of the channel, okay. So 3 point, 1, 2, third time, you see here, went below it, go back above it here. This candle closed bullishly. Okay, we go to the entry time frame. Okay, give it a chance. Okay, and if the price start going up, okay, and we enter this trade, as soon as the price reaches the upper side of the channel, we may decide to exit the trade. Sometimes the channel, the horizontal channel, may be quite wide. So in that case, you may decide to take profit when the price reaches the midpoint of the channel, depending on your risk tolerance. But the general rules for exiting a bullish trend is when a price reaches the first and nearest resistance level. So as I was explaining to you first, in the first example of this rising channel here, you see, so if I enter here on the edge on my entry time frame and the price going up, okay, as the price approaching, you see there's a resistance here. I will take profit here. I will definitely take profit here. I do that because you see some people were selling on the edge here. I don't want to be the last person coming out. In fact, looking at the market pattern, it's a horizontal market pattern. We should be ready to take some profit here if you want to. But you don't have to, depending on your risk tolerance or your trading style. So 3 market pattern, the rising channel, the declining channel, the horizontal channel, we use the trend line. But if the signal is fired on the hourly chart, 2-hour chart, 4-hour chart, you draw the common sense trend line. But as you are looking for the weakness of the trend, you need to go to the entry time frame and see whether a candle or 2 candles close below the common sense trend line, okay, of the signal time frame, and then you can exit the trade. So these are just general rules that I follow. But my trading style is based on the market stable data that the price will go out from one support level to the next resistance level. So I tend to take profits as the price reaches the next resistance level. Why? Because my trading style is based on achieving consistent winning trade. So if I have a losing trade, I don't want to use my trading capital to pay for it. I want to use my profit to pay for my losses. But if you are not taking profit consistently as a day trader, you will be forced to use your trading capital to pay for the losses, which means your trading account will be going down. It's better to have enough profit to pay back some losses instead of using your capital. I think it's a smart way to do it. All right. So before you enter the trade, you will see the price structure. So you are buying here. What's going on is horizontal market pattern. Okay, you know that it's better. It will be prudent if you are very conservative trader. Okay, prudent to take some profit here. Don't hesitate to take it. Just take it and wait for another setup. Okay, but if you are trading only one financial instrument, you may find that strategy a bit difficult. So at least if you trade 2 or 3 financial instruments, a stock, a currency, stock and a currency, or two currency pairs, or 2 stocks, or 3 stocks, or 10 stocks, depending on your trading account or what you are trying to do. I'm not saying to overtrade. Okay, you will find that you will find out that this strategy will work beautifully. All right. So the best approach is that you enter one support level, look where is the resistance level. Sometimes traders may find a setup on the hourly chart, even on the weekly chart, but you don't want, as a day trader, you are not going to wait many days, okay, for the price to reach the next support level because your setup is on the weekly chart or daily chart. Let me show you on the daily chart here. You see here on the daily chart here for the pound-dollar currency pair. If I draw, okay, a trend line like this, you see here, price came near on the edge here. If I now switch to, okay, my signal time frame or first best time frame, and I enter the trade as the signal fire, I enter price going up. I'm not going to wait 2 days until the price reach the next support level before I exit the trade. Because if I am day trading, I will take my profit as soon as I'm quite happy with the profit that I got. All right. So for exiting the trade, it's better if you are day trader, you're going to go to 50 minutes, 10 minutes, okay, even to the 1 minute, 3 minutes to exit the trade using the channel. All right. You also see on the, suppose you on a family chart, you enter the trade, you are selling, okay, or you are buying, okay. You are buying on the family chart, you are buying on the 3 minute chart. Okay, suppose you enter somewhere here, the price going up, you give it a chance, it's going up, okay. You can also use the channel. So this is your entry point, 5 minutes. So as soon as it come out of the rising channel on your entry time frame, you can also exit the trade. So you can use the channel on your entry time frame to exit the trade depending on your risk tolerance. The same thing you will do also if you are selling. Okay, you can go to your entry time frame and draw the channel, and as soon as you see it come out of the declining channel, you know that the bearish momentum is diminishing and you may come out. So we can use a trend line, we can use a channel to exit the trade on the entry time frame. But remember the trading drill, they set up the signal and low risk entry point. All right. So you are looking for a setup on a higher time frame, but you are exiting the trend on the lower time frame, monitoring the reaction of the price on the edge of the common sense trend line that you are looking at on your entry time frame, or the channel as I draw it here on my entry time frame. But remember what I said, my trading approach is that I buy a one support level, I'm waiting to come out at the next resistance level. But if the setup is on the 4-hour chart or daily chart or a weekly chart for day trading purposes, I may have to go to my lower time frame. If I have 50 pip, 80 pip, I'm not going to wait for it to reach the support level on a daily chart before I come out of my day trade. If I'm swing trading, yes, sometimes swing trading, I may stay in a trade for 5 days, all right, or more, depending. So in that case, if I'm staying on the trade for more than a week, it means that I have a fundamental reasons why I'm staying in the trade, because I know that the fundamentals are solid and this thing is going to go down more or it's going to go up more, and I give it a chance. All right. Let's see how long we are recording this video here. Okay. The next thing that we can use, that I use also to exit the trend, is a pattern. Okay. So let's talk about it. That's what a lot of traders use. Again, a setup going, okay, I'm going to go back again to my hourly chart, okay? This is one example here. You see here, the price went down, okay, it went down, and then it consolidated here. I consider this session here as a round bottom. You see the consolidation session. In my view, this is a round bottom. See the triangle here, okay? I don't want to remove some of my lines, so this will force you, all right? To force you, I mean, not the proper sense of the word forcing you, but this will, okay, allow you to concentrate more to what I'm doing here and follow my cursor. Let me explain what I'm saying here. So let's remove some of the line that I draw here. Okay, excellent question, by the way. Okay, so I'm going to remove this. Okay, I'll leave my orange line because I will need it later. Okay. All right, I'm going to remove this one also. That's it. So you see the price went down and form a kind of a round bottom here. So we use also a chart pattern, okay, to set the target. So the round bottom, how do we set the target? We measure the depth of the bottom, okay, the round bottom like this. This is the depth of it, and we will project it to the neckline of the thing. So the target zone, okay, is somewhere here for this pattern. So you can see that the price try to go near that level. Sometimes you may enter the trade like I draw the trend line here on the edge somewhere here, and you will be very patient and say, I'm not going to close this trade until I get paid. But as I explained to you, that I will share with you a tip that you can use so that a losing trade does not end up being a winning trade does not end up being a losing trade. The strategy that you can use once you enter the trade, okay, and then it's profitable, like 30 pips, 20 pips, or you have a profit equal to your stop loss. So you were using 30 pips stop loss or 25 pips stop loss, and now you have achieved a 25 pip stop loss, a 25 pip profit, which is equal to the stop loss that you were using originally. Instead of leaving your stop loss to the original place, you will move your stop loss to the entry point, which means you are not risking anything because you want to give time to the price, to the market to continue until it hits the ultimate target. But some traders do that. They are very disciplined about that. They enter the trade with 20 pip stop loss. Okay, they achieve 20 pip profit. They move their stop loss to break even. And sometimes they are taken out, but they are taken out with a zero profit, which means the trade was profitable up to 25 pip. They moved their stop loss to break even, and the price went back down again to take them out. But this time they come out with a zero loss and zero profit. It's up to you. All right, it's just to protect your trade so that a winning trade, okay, does not turn around and become a losing trade. It's to protect your trading capitals. So we use also, okay, the chart pattern, the projection, the target price to set the target. As you ask me, when I'm using this method to exit my trade, I always come out before the price hit the target. I always leave some money on the table. So like this one here, as you see here, 1, 2, 3, fast like this, tall candle. I don't want it to see it come back down. I'll come out somewhere here after this candle here. I'll come out somewhere here, okay? Because I know that it's going to push it all the way here, but I don't want to stay in until sometimes people mess it up and blah, 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 want to take my profit. Sometimes you leave some table. Sometimes you'll see the price will go up the whole day. You'll be looking back and say, what? If I knew about it. Okay, so that's the challenge. So the pattern that we use traders can use an inverted head and shoulder pattern, all right? Okay, so here, I'm not going to draw it now. I can show you here on the chart. There's one here. Okay, so this is the head here. This is the left-hand side shoulder. This is the right-hand side shoulder here. And you see this section here. Okay, so we can just go like this. This is the neckline here. So you can check on YouTube or on Google chart pattern, okay, and you will see all the target, how you set it. You measure the depth of the inverted head and shoulder, and you project it like this. Again, you can sometimes you set the target like this. If we have a resistance before the target, the resistance should prevail because the price is going from one support level to the next resistance level. So if the target is behind the resistance level, be careful. The price may change direction before hitting the target or may not even reach the target. In that case, if you want to remain in the trade for too long, you may have to move your stop loss to break even if you are already in profit that is equal to your stop loss or more than your stop loss. Sometimes you will be taken out with a zero loss or zero profit. All right. So using the chart patterns, the inverted head and shoulders I show you now, the target here. Sometimes you may have to let it run until the target hit, and you will be smiling. One thing I need to say here, very important, is that when you enter the trade, and you place your stop loss, you are already in the trade, is profitable. Suppose you're not going to watch the screen, all right, or you're going to go to bed, whatever you are doing, set a limit order to allow the computer to take profit at that level. But there is a danger for that because of the crazy or dangerous traders. Any order that we put into the market is visible to the other market participant, like a limit order is visible. Sometimes funny things do happen. I tend not to reveal to the market all the time what I'm trying to do. Sometimes instead of using 40 pips stop loss straight away, I may use 25 pip, but I know that for this trade, I'm supposed to use 40 pip, but I will use 25 pip. You will see sometimes they will try to take you out at 25 pip. Then as I see the price coming near my stop loss, I'll move my stop loss, which make it difficult for the dangerous and crazy traders that are in this market profiting from other trader losses. It's happening. We can't deny it. Is it illegal? Well, that's the way other traders trade, and this is nothing wrong with it. We need to protect our trading account. So chart patterns, So the inverted head and shoulder, that's how we do it. The head and shoulder pattern. So you have the head like this. So now, by the way, if you know all this already, and I'm talking about it, I'm not thinking that you're a new trader. I'm doing it for other traders that also will watch this video. So don't think that I'm trying to think that you are a little baby trader, all right? So it's just for other traders that may not know what I'm talking about here. I need to tell them that. So for the head and shoulder, the head is this one here, the left-hand side shoulder, and the right-hand side shoulder here. We draw the neckline like this, and we can set the target, like this. And we measure the depth of the head to the neckline, and we project it down. This is the ultimate target here. Myself, I will always come up before. So you may see this target on a 2-hour chart, on a 4-hour chart, even on a daily chart. And suppose you switch to your first best time frame or your entry time frame, you enter the trade here, and the price start going down. Do you have to wait? I don't wait until the target hits sometime. Unless I am swing trading. If you are a swing trader, you may give it room. But anytime you want to remain in the market for too long, check the market environment, check the economy news, see what is happening during that time before you let your trade stay in the market for long. If you are swing trading, you can also move your stop loss to break even if you have enough profit already, so you don't wake up the next day and see that the stock gap down or gap up and they take you out and wiping out your profit and taking also your stop loss. So moving stop loss to a break even is an excellent strategy to control the risk, especially if you want to remain in the market for long or time. But as soon as you enter any trade, set a target, all right? If you're watching the market, if you are watching the screen, you can set a limit order and monitor it. But the limit order, remember, other trader, other market participants will see what's going on, and they may try to trade against you. All right, very often it happen. All right, so for the head and shoulder, that's how we set a target. So you see, for the inverted head and shoulder, the head and shoulder, the round bottom, the depth all the time. We can use a pattern to set a target, but the price does not have to hit the target. The price is always moving from one support level to a resistance level, and moving down from a resistance level to the support level. Now, if you have you want to take a big profit in one go, that's not my trading approach. I prefer, if I'm day trading, I want to take profit bit by bit. You'll be amazed. You may have to wait for 3 or 4 days before you get 100 pip, but you'll be amazed that you may take 5 trades in one day and take 100 pip. So you didn't wait 3 days, but in one day you take 5 different trades and you have your 100 pips. All right. Another method that I use sometimes to exit trade is that I enter the trade. Depending on what I want to do this week, I may decide to say to myself, every trade that I take, okay, that reaches 30 pips, I will take that profit. All right. So that's my plan. All right. Which means I'm very, very defensive and I'm quite aggressive. 1, 2, 3, I get 30 pips. I don't care where is the target, what's going on. I'm taking my 30 pips. Next trade on the edge, low risk entry point, I'm about to take 30 pips in each trade. Like a high frequency traders set their target for 5 pips, 2 pips, okay, 1 pip, okay, consistently. So sometimes it's just a decision for each trade this week. As soon as my trade reaches 25 pips, I'm taking it. So which means you want to accumulate profit gradually. But when you are doing that, you need to be very disciplined so that you don't take a big chunk of loss somewhere else. You need to control also your losses, which you're going to be very decisive to cutting losses, because you are taking just the minimum that you decide to take. You don't want to have another 50 pip loss somewhere else, another 60 pips somewhere else. You want also to be rigid with your losses also, so that the winning and the losing balance, or even you get profit at the end of the day. Check it out and practice with it and see whether it makes sense to you or not. So a trader may enter the trade, seeing a pattern, and will remain in the trade until the pattern is completed or the price reaches a target. Talking about a pattern, there's another pattern that traders use, the Elliott Wave pattern. One example that I share with traders at 24 Elliott Wave YouTube channel. Okay, let's see how long I've been talking to you now. I think I went over my, I went above my 20 minutes, so I'll let it run, okay. Another method that traders use that I talk about, the Elliott Wave patterns, the flat correction, okay. So we see 1, 2, 3, 1, 2, 3. And we are expecting it to go down 1, 2, 3, 4, 5. If you don't understand Elliott Wave, that's fine. But trader will use the pattern to exit the trade. Apology for coughing. But the idea is that they enter the trade at the beginning of the pattern. So 1, 2, 3, 1, 2, 3. And then they enter the last part of the flat correction, which is the longest part. 1, 2, 3, 4, 5. Right, we go down in 5, wave down. So they will enter at the top of the beginning of the first wave, all right, and they will wait until they see the 5th wave. So they will not exit the trade until the pattern is completed. It's like drawing, all right. So trader, I use that also on a 15-minute chart. 15-minute chart, you see a lot of flat correction on a 15-minute chart, and sometimes I enter there and I let it run and I set the target until to the point where the 5th wave will be completed, okay, for the flat correction. Again, you will see that very often the price will stop if it's going down at a support level, okay. So pay attention to the support level. This will help you to exit the trade without too much trouble. From sell at the resistance level, take profit at the first and nearest support level gradually. You will see sometimes the price will do that, and then you come out, and then they will break it below it, go down, and then they come back again and retest that support level, and then again you receive another signal and then enter. Then in that case you are entering the trade bit by bit. You take first profit, now break below, retest again, you enter again, another profit. Again, you take your profit again at the next support level, you go away, and you just doing something else or trading something else, and then again you see now here they are again, retesting again, and then you receive a signal and then you sell again. And sometimes it works beautifully. Sometimes some of them will be winning trade, some may be a losing trade. So the patterns, the Elliott Wave patterns, traders use it also. Zigzag pattern, for instance, 1, 2, 3, 4, 5, 1, 2, 3. Common sense trader of the 1, 2, 3 is broken. All right, we can sell them. All right. So, and then they wait for the pattern to be completed when traders are paying attention to the internal wave, okay, to decide when to exit the trade. Again, they support the resistance, and also using the channels on your entry time frame. So I show you on the 5-minute chart, drawing channels. The 5 minutes, on the 10 minutes, on the 50 minutes, will allow you, as you see it, okay, suppose you see here, see a double top here, and you sell it, so rolling it down, you draw your trailer like this, and then selling around fast. Okay, where is he going? Okay, you're looking for support. You see the support here. Okay, those lines, you extend them. Okay, extend them. Here, this is where it's coming from a resistance. How do we know value resistance? By you will see bearish patterns. Okay, bearish patterns. Okay, turn out. Okay, once it's coming out of the channel, you know that. Okay, you see here it ran fast. So you see this channel become useless when it go below it. So it go like this. To control it. Go in profit, control it like this. As soon as it pop out of this channel, you can close it. Alright? So using a pattern where we sell, so we don't sell the whole pattern, okay? We can sell like this is similar to 1, 2, 3. Price goes up 1, 2, 3, 4, 5, and then 1, 2, 3, 1, 2, 3. Typical. So on the 50-minute chart, you see that this pattern beautiful here. I'll sell here by all means. So, and then you see here, okay, you can just instead of using a double top pattern, you can just go, okay, like this. And you can sell, place your stop loss. You go, you see, now this here, I would think of flat correction. Then you roll it down one, the first one, this is the longest part. And then you know that it's coming down like this. Okay, and then you don't have to sell the whole pattern for the flat correction. You sell somewhere here at the beginning of the first, okay, wave of the C wave. All right, so patterns, we can use a Fibonacci pattern also. Okay, the Gartley pattern, the bat pattern, the butterfly pattern, okay, the crab patterns. These are patterns, traders trade them, and they exit the trade at the point where the pattern is completed, all right? But you can sell a pattern or buy within a pattern bit by bit because you know the pattern, you know that, okay, now the price will do this here, but you don't assume it, okay? You see the pattern, you know that you're expecting the price to do something, you wait for it until the price is doing it, which means you see a setup, the pattern, the formation of the pattern is the setup, and then you go to, for instance, if you are day trading, to the first best frame, and then you enter the trade. If you are swing trading, okay, you use okay, your tool to enter the trade. Now, for swing trading, suppose you are a swing trader, you're going to remain in the market for a while, okay? So you're going to require more stop loss, 50 pip, 60 pip, sometimes 80 pip, reasonably, 50 to 60 at least, okay? Or 75 region, okay? In that case, you are risking too much money, okay? You put too much money you want to use the trading tree carefully and enter the trade. Enter the trade, prior rolling it down, move your stop loss to break even, okay? Break even, control it. Or sometimes you enter a swing trade, and the first day you end up having maybe 100 people on the first day. Take it and go. Okay, take it and go. Take it and go. Don't expect it to run on the whole day because now the market is quite dynamic because of the tools that traders are using, the high frequency traders, the hedge funds. The market, in the past, people can remain in the market quietly, enjoying themselves for many days. Especially if you are trading Forex. Forex is quite dynamic. Take profit consistently. Your broker will fear you and will also monitor your account carefully because he knows that you understand again. The price you see here, it went up here, okay? And then it went down, okay? And then still again, it went up again, and then it went down again, okay? This is the kind of market we have now. And then it went up again, and then it went down. And it went up, blah, 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 blah. The price is not going up continuously anymore. You will be amazed sometime when one day the price goes down big time, and the next the price goes back up, taking even people who are stubborn to remain in the trade too long. Okay? So to summarize this, we can use a trend line, we can use channels to exit the trade. We can use a completed pattern, okay, to exit the trade. All right? If you are a swing trader, we're going to remain in the market for long. But if you enter a swing trade, we have it. Just try not to be greedy. That's what I will say to you. You see profit, look at it. Always set a target for the week. How my profit will make sense for you at the end of the week, okay? Some week can be very tricky. First week of the month, tricky. All right, so you may decide, okay, this week, I want to grab out of this shitty market, forgive my language, all right, 300 pip or whatever, 200 pip. And once you get that and you get more to it, in that case, you become more defensive because you achieve your target now. You don't want to give back your target. With that, you will be, without too much blah, 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 you will know when to exit your trade. All right? But the bottom line for exiting the trade is based on the market principle that the price will move from one, support level to the first and near resistance level, and if we enter the trade at a support level, our ultimate exit point is the first and near resistance level on the signal time frame. But we will monitor, to know whether it's getting weak. We will prefer to monitor our trade from the entry time frame using channel or trend lines, I will be sending you another email where I will explain to you another strategy for the TSTW24 trader that I pay attention to when we are day trading, I think it's at www.best-trading strategy, exit strategy, and check it out, I think that's all. But remember, the most important thing what we don't want is that a winning trade become a losing trade. So for that reason, we must move our stop loss to break even if you decided to remain in the trade for long. All right? Sometimes you may do that, and you may see that the price start pulling back. You say, I don't want to give up too much of my profit. And you may decide to take less profit than original. It happens, but the price may resume again and go back up. Remember, it's going up, you display higher lows, higher high. So you are looking for it to display a higher low, and then the common sense trend line to be broken, and then you enter. As it's going up, you draw another trend line to monitor the progression of the trend. If the price return back below that trend line, you know that it's getting weak. It's up to you, and decide to come out. So trend line, channel, patterns, support, and resistance will allow us, to manage our trade carefully. So, strategy for the uptrend, as I show you, channel, strategy for downtrend, strategy for the horizontal market patterns, If you are swing trader, how you control the risk, You want to remain longer in the market, monitor carefully. In that case, be very strict, and you see a lot of profit, take it. You don't have to wait too many days. Sometimes you enter as a swing trade, it moves fast, especially with Forex. So you set your target, you are happy with everything. Especially you are swing trading, you want to use resistance on a weekly chart at least. They are solid. Resistance on the weekly chart, key levels, all right? Even on the yearly chart, key levels that professionals are watching where they are selling. So you want their stop loss to protect your stop loss, all right? Where a lot of traders put the trade, and they find it difficult to grow. So those are the areas. If you are swing trading, you want to select the best resistance. If you want to sell, select the best support level where the signal is fired. So this support can protect your trade, because as the price tries to go below those key levels, other traders are willing to buy it again, supported by the fundamentals, of course. So for swing trading, pay attention to where you are buying and at which price you are buying it at, considering the risk-reward ratio. Very, very important. If the swing trade, if the reward is not higher than the risk, don't risk 50 pips for 25 pips. For swing trading, don't do it. For day trading, sometimes we do it and we get away with it, but for swing trading, don't do it. Because, especially if you are trading stock, you'll be surprised. Next, the gap down, gap up, all these things. You don't want that, For traders that are scalpless, which sometimes traders say to me, John, 5 minutes too high. 5 minute time is too high. 10-minute time frame is too high. 3-minute time frame is too high. I want to trade on a 1-minute chart. This is about a trading style. Some traders trade on the very, very lowest time frame. There's some people trade even on the 10-second time frame. If that's you, 5 pips is a lot, all right? 10 pips is too much for scalpless. So for these type of traders, they will go to their entry time frame. They will draw the channels. And they can apply the same strategy, but they have to go on the lowest time frame when they are quite happy to manage their scalping. This is the end of this video about how to exit a trade like a pro. I hope you have learned something from it, and we put it to use, to make excellent trading decision. This video was recorded because a trader called Sean, TST trader, has contacted us and asked a question about how I see the trade, what signal I look for before exiting the trade. Excellent question. Thank you, Sean, and I speak to you soon. If you have any more questions, do not hesitate to get back to us. This is what we want. Okay, the communication, the dialogue between the traders and us. As I'm sitting here, okay, sending the question, and okay, we record video and we share it with the public. Thank you, and speak to you soon. We are the TSTW 24 Traders.